Revenge is not what you think. Revenge trading isn't about recovering money. It's about recovering identity. After a loss, something destabilizes internally, not just your P&L, your sense of competence, your perception of control, your internal balance. And when that balance feels disrupted, a powerful impulse appears, the urge to correct. If you don't understand that urge, you will act on it. And when you act on it, structure collapses. Let's break down what's really happening. The moment after the loss, you take a loss. Maybe it was clean, maybe it was avoidable. Doesn't matter. There's a microsecond where you're neutral. Then it hits. A tightening in the chest, a slight heat behind the eyes. Breathing becomes shorter, and a thought appears. That shouldn't have happened. This is not analysis. This is identity friction. Loss creates imbalance. An imbalance demands correction. That demand is what I call the correction urge. The correction urge is the impulse to immediately restore what was lost, financially or psychologically. It sounds like, I'm not ending red today. I'll fix this. That was stupid. I'm better than that. This market isn't smarter than me. Notice the tone. It's not calm. It's defensive. Revenge trading does not start with aggression. It starts with wounded self-perception. You are not trying to win. You are trying to repair. The identity layer. Most traders avoid. Here's the uncomfortable truth. Many traders are not trading for income. They are trading for proof. Proof they are competent. Proof they are intelligent. Proof they can win. So when a loss occurs, it doesn't just reduce capital. It reduces self-image. And when self-image contracts, ego moves to expand it. Revenge trading is ego expansion under threat. If one loss destabilizes you, your confidence was conditional, and conditional confidence is fragile. Emotional equity, the concept you're ignoring. Every trader has two accounts: financial capital, emotional equity. Financial losses are visible. Emotional losses are not. Each loss withdraws emotional equity. If your emotional account is thin, you overreact. Stable traders protect emotional equity as aggressively as financial capital. They understand that once emotional equity drops too low, decision quality deteriorates. Revenge trading is what happens when emotional equity is depleted, and you try to refill it through aggression. That never works. The escalation pattern, revenge trading, follows a predictable escalation. It is mechanical. Phase 1, arousal spike. Loss increases physiological activation. Heart rate rises. Mouse movements become sharper. Chart switching increases. You lean forward. Your nervous system is elevated. You are not neutral. Phase 2, narrative construction. Your mind builds justification. The market is irrational. That stop hunt was obvious. I just need one clean trade. Narratives reduce discomfort. They justify action. Phase 3, time horizon collapse. You stop thinking in distribution. You stop thinking in 50 trades. You think in this trade, this moment, immediate recovery. Revenge trading collapses long-term thinking into short-term urgency. That collapse is dangerous. Phase 4, risk distortion. Size subtly increases. Stops get tighter or wider emotionally. You take marginal setups. You are no longer executing edge. You are executing correction, and correction is emotionally driven, not statistically grounded. Phase 5, compounding instability. If the next trade loses, intensity doubles. Now you are trading frustration layered on frustration. This is where accounts implode. Not because of one bad setup, because of escalation without containment. The most dangerous scenario, revenge that wins. Here's the trap. If you revenge trade and win, the behavior strengthens. Your brain associates aggression with relief. You learn, intensity fixes pain. That lesson is false, but powerful. Over time, you begin trusting emotional impulse more than structured execution. And that's when long-term expectancy erodes silently. Reinforced impulsivity is harder to break than failure. Revenge trading is anger turned inward. Most traders think they're angry at the market. They're not. They're angry at themselves, angry for making a mistake, angry for missing a move, angry for not being perfect. Revenge is self-directed frustration projected outward. Until you recognize that, you'll keep fighting the wrong enemy. The market is neutral. Your self-judgment is not. Why action feels like control. After a loss, inaction feels weak. Action feels powerful. But this is illusion. You're confusing motion with mastery. Control in trading is not about speed. It's about stability. Professionals don't act to feel better. They act when neutral. There's a difference. Structural containment, not motivation. We do not fix revenge trading with confidence affirmations. We contain it structurally. Number 1, emotional equity rule. If you feel emotionally charged after a loss, your emotional equity is reduced. No new trades until baseline returns. If breathing is shallow, posture tense, thoughts racing, you are not neutral. Wait. Number 2, mandatory cool-off. After consecutive losses, 2 losses in a row, stop. Not because the system failed, because emotional volatility increases exponentially after back-to-back hits. Contain escalation early. Number 3, no same direction re-entry rule. If stopped out long, you cannot immediately re-enter long, even if setup reappears. Force cognitive reset. Break emotional continuity. Number 4, separate identity from outcome. This is internal work. A loss is statistical variance. It is not a character flaw. When self-worth detaches from single outcomes, revenge loses fuel. Stable identity equals stable execution. The hard reality. If revenge trading is frequent, this is not a strategy issue. It's ego intolerance. You cannot tolerate temporary imbalance. You need immediate restoration. But sustainable performance requires emotional durability. Durability means you can take a loss without urgency. You can sit in red without panic. You can close the platform without forcing resolution. That's strength, not aggression. Final reflection. Revenge trading feels powerful. It feels corrective. It feels decisive. But it is reaction disguised as control. Professional traders don't rush to restore pride. They protect state. Because once internal stability collapses, execution quality collapses with it. Next time you take a loss and feel that surge to re-enter immediately, pause. Not dramatically, quietly. Ask yourself, am I trading opportunity or am I restoring identity? That answer determines longevity. Protect emotional equity, preserve neutrality, let distribution work. Process over profit, always.